Good morning, good afternoon, everyone. As always, my name is Russ, and I welcome you all to our Friday update here on DataDash. That has been an amazing week, and I would love to drive you through the charts and show you today a specially crypto-dedicated update. First, we're gonna go and check the Bitcoin and where I am longing it for those who have missed my previous trade. We're gonna go through Ethereum to BTC chart, we're gonna chart Ethereum, and then I'm gonna give you two altcoins and the levels where I am interested to transact. With all that said, guys, let's go. So, first of all, Bitcoin. I can see that there is a market structure break, first of all, and that's why obviously we are not looking yet here for shorts, we are looking for longs. I've been already long here. This is the so-called demand anticipation on 4 hourly. You can easily see that order block that has been forming here. We start closing above, and that could already signify a nice entry opportunity with the stop loss just below the previous week. I don't want to have too many swipes in there. This is answer for all this question who asked me in the comments. So how you've been pre-CPI bullish at Bitcoin at around 61K and indicated all the move to 64 and 66. Well, that was pretty much it. I'll gonna make a separate setup or separate video actually on the demand anticipation so you can see those formations in play. But that's obviously doesn't take me too long to see that here the buyers are willing to transact on this range low and step in the game. So right now, what I'm looking at right now, obviously this is not the point to get long. I think that there is still quite a high probability that we're gonna come back and retest our either Monday high, which is around 63,400, or overall that large order block that is highlighted here in red. So I don't know exactly where within this order block the buyers would step in, but I would say if you are willing to long, and I think that we would go at least to 68 to 69K on this move, I would like to emphasize the necessity to bid lower and not right now. Also, for those people in the Telegram alert group of mine, for those people who missed the long at 61, we entered an additional long here at 64.9. So we are in a nice profit from there. On top of that, I would say don't underestimate the resistance at 69,000. It's going to be rather sooner than later. So yeah, as I mentioned, add to your long at 64 and expect the 69 to be fully exiting. If you're already in together with me in that long, then I would move the stop to break even and take the partial profit, because it seems like that zone here is still providing us a certain supply that might take a few more days to resolve. All right, let's start here with the mother of all charts, ETH, BTC, all altcoin charts, of course. That's how I would start charting pretty much any altcoin to see the relative strength of the main one versus the king. Well, first of all, let's start with the fact that everyone been really calling for an oversold bounce. And when I'm speaking of the oversold, there are multiple ways how you can view that. However, obviously, whatever your RSI is showing you, the levels that we have seen on the daily, there's an overextension. You can also apply the same concept of the Bollinger Band on RSI and see when RSI or an acceleration has changed too quick, too fast. And that's normally when we have the bounce in the previous zone of the statistical distribution of this RSI. When we would go on 4 hourly, the picture stays quite similar. Honestly, on 4 hour, below even the extension of the RSI band, we had so-called oversold moment of 18. And of course, RSI, the number of RSI can vary because this is a function that you can adjust. You can go here into your settings and pick up exactly the formula, how your RSI is calculated. But whatever the formula is, obviously those teen levels, anything between 15 to 20, are coming extremely rare, and the technical bounce is normally taking place. On top of that, you see we've been creating the divergence over divergence on all of those drop downs, not just the divergences such as stochastic or MACD, but also the RSI divergences, or on balance volume or BV divergences that showed us that probably there is a certain degree of exhaustion. And the sellers are getting exhausted because they're getting out of ETH to sell. And despite the prices getting lower, this price movement is not supported on top of everything by neither increased volume or nor increased acceleration in selling. Now, what is so interesting for us to see when we're going to go on the monthly, it is no surprise. And this is the reason why this yellow line of mine has been here for years. I would also illustrate why it appeared here, because if we're going to go here, 2017, that's the level, 0,046 is where we bounced. And this was also the level in June 2021 where we could not reclaim. So we can also consider that all that time, Ethereum has been in a large range. And actually what happened is the fact that once we lost that range, once we lost those lows of the multi-year range, we came to retest the fair value gap. What is the fair value gap? Fair value gap is those overextended candle, in this case monthly, which had a tremendous progression of price in a short amount of time. In this case, within a month. And the fair value gaps are normally created in between the high of the previous candle and the low of the following candle. So this green rectangle is the fair value gap that I was expecting the price to tap in. And the level, the yellow level of 4.6% was exactly the point where we returned. I illustrated in the Telegram group of ours the early sign of a bounce. I pointed out already here that I see the market structure break on a lower term time frame. So we created this market structure break. Then one more low is the RSI divergence, and that's how we bounce, right? So what's so important right now is, first of all, to reclaim that level of 4.6%. Of course, it's not going to happen in 1 hour. We're going to bounce, maybe consolidate a little bit under resistance, and then we're going to see if we're going to come back to this green rectangle and grab more liquidity from there, or if the bounce is strong and sustained, because today is Friday, and Friday is actually signalized by lower liquidity. Mondays and Fridays are the periods where either New York Stock Exchange is not yet open, or, for example, Hong Kong or Tokyo Stock Exchange are getting closed. So it's easier for the market makers to move the price simply due to the fact there is less liquidity available in the market. But guys, I am, despite being quite bullish on this alt bounce, can be simply technical bounce, which we can play for a couple of days. I'm not expecting that, that is an absolute bottom has been formed. And from here onwards, we're going to have the up only moment, also for the reason that Nick has illustrated on Wednesday. But I also like to look at Ethereum chart itself, and Ethereum chart itself gives me a tiny bit of a warning here. And where this warning comes from? This warning comes from the fact that we have not yet swiped our lows. So this is the range we've been in. Let me adjust it a little bit, the green rectangle. And let's say 3,180 is the upper band of this range. And what is concerning to me is that we had that liquidity swipe here. We had one more liquidity swipe here, and we left quite a lot of poor lows. So if Ethereum gonna bounce back from here, that means that a lot of people who are actually were able to fill their longs in here would have their rise up. And normally market makers, especially on the low liquidity days, such as Fridays, or especially weekends. Weekends are even worse than Fridays. I'm not trading on leverage on the weekends whatsoever. They are being very often swiped, right? So that can coincide with what I've been saying about ETH BTC as not reclaiming this 4.6% line and slightly bouncing back again to the fair value gap. I'm referring back again to the monthly. It might be that we need one more tap a bit more liquidity into here, that would actually coincide with Ethereum doing one more swipe, and then only the alts would go upwards. One more thing I wanted to point out is that despite the funding looks quite healthy, Ethereum funding itself is slightly overextended comparing to Bitcoin and a few other alts. And moreover, that move that we actually had here in price has not been really yet supported in cumulative volume delta on spot buying. So this entire move has been caused by the extended open interest when it comes to the perpetual contracts. So the perpetuals have been driving that move, and for that reason, I'd like also to see the spot coming in. That does not mean that ETH not gonna move higher. I'm just saying that please don't long from this existent level. Maybe give yourself a tiny bit of a DCA all the way from the lower of the range, 2,800, late 2,800s, several DCA positions if you're bullish overall on the daily time frame. That is the interesting thing to notice here, is the fact that our average true range on Ethereum is at the levels that we have not seen pretty much since 2017. For those who doesn't know what the average true range is, it is a measure of volatility that pretty much defines the entire range of the asset price for a particular period. So lower the average true range is, higher the probability is that it would bounce to its previous level and the volatility would kick in into the markets. There is another indicator that I even prefer way more, simply because less people understand it, and so it acts in a certain form of an edge against the market, is the BBWP that you see here below my stochastic RSI. So what BBWP is the Bollinger Bands width percentile. So the Bollinger Band width percentile, for example, if you're gonna go here on the weekly, you would see that on the weekly time frame, that indicator flashes blue because we are reaching the first percentile of a Bollinger Band extension. It means that price has never been that flat. And that in simple word means that the move is coming. This indicator never tells you which direction this move is going to take place, right? For those reasons, you can use, of course, support and resistance, your level of bounce, but then on top of that, you can have the confluence with your oscillators, whatever you use, stochastic or MACD. You can also look at an RSI and see if you're, like, for example, in a deeply oversold territory, that the bounce to the upside is more probable. So for example, let's come back to this moment of the last Bollinger Band width percentile flatness. We've been on this range on Ethereum in the summer 2023, this boring range on ETH BTC for a while, and then we had this overextended flash down. Now, if we're gonna look on Ethereum itself, it's gonna be interesting to see that the picture is similar here, May, June 2023, and then blue on BBWP, and then we swipe this range and had this intense move down. So right now we are not there yet, but we are getting very close, and it's also possible that the move would start without necessarily the indicator flashing blue. The move can start also from 10 or 12%. We are not obliged to go to zero, right? We are not obliged to be in the first percentage band, right? We can also start our move being, let's say, within 90% of the moving range. When it comes to Solana, extremely bullish market structure. As you can see, we have already printed those higher highs, and moreover, what's super important for me, and that's the reason I was waiting to go long. As a value investor, you would say, oh, I want to go long as cheap as possible and then sit on my trade for years. As the trader, I am operating in a different mindset. I'd like to the supply, first of all, to be resolved, and Solana to accept in the previous range, and then I know I'm in the previous range low, so my target would be at least $200 to the range high, and that's where I'd like my capital to be allocated. So I am quite happy about Solana accepting into that range. I would wait for 1 or 2 4-hour candles to get closed above that red rectangle, and my stop loss would be the previous low of 156.8, and the take profit is $200, as I mentioned. Also, what I like to see is that Solana Ethereum chart is looking quite bullish. I feel that there is a few more activities going on in the Solana network, and for those reasons, I would also not be shy away from seeing that level on relative Sol ETH chart of roughly 5.7% being reclaimed. And then I think that definitely would give a breather for Solana to reach $200 per coin, right? So very bullish, like Adam and Eve or cup and handle formation here also on the daily. I think, Solana to ETH, if we reclaim that level, then yeah, it's quite an uncharted territory move. So then another altcoin I'm looking at. Well, to be honest with you, most of the alts are looking, as we discussed, they're just in a ranging environment here. So there's not so much you can do. And of course, some of them are closer to their range lows, which indicates the lower strengths of that move. Some of them are close to the range highs. That's also not the place you would like to long, because first you want this acceptance above the range high to take place, and only then you're interested. In my opinion, the value investing is not something you really need to apply to altcoins, because obviously things can go down, as 80-90%, and there is it's not like buying Alibaba at $80. That is like a completely different thing. So yeah, you can say, okay, CRV at 40 cents is an amazing deal, but then I also don't see much of the strength here. So what I would normally do, I would open my browser and I would go to Levitas. I would just go into assets and see the daily gainers. I would sort them, play a little bit, see where is the biggest daily change, and pick up my candidate for a long, also taking into account, of course, the open interest change. So for example, API 3 is doing actually quite good. What I first see every time I look on the pattern like that is the PO3 idea of accumulation. Then we have the zone of manipulation where the stop loss has been triggered and people have been thinking that we are accepting in the lower range, and now we are due for a distribution, so reclaiming of this previous highs. So of course, if it makes you feel more comfortable, you can draw a meme line and see that we are breaking out here. And in any case, what's really important for me is that we accept above that range, and I think we have a good candidate for that. So I just showed you CRV that has no strengths, and now I'm seeing API 3 that's already on the top of the range. What I'm gonna do here, I'm also gonna go to Coin Analyze, and I'm gonna see what I see. The negative funding, people start to short here. On top of that, the open interest increase, price increase, volume needs to pick up. We are in the top range. Of course, everyone is waiting, so wait for the acceptance, don't long right now. But so far, seems like quite a sustained move from my perspective. So API 3 should be your candidate as soon as give it a few more 4-hour candle closures. As soon as API 3 accepts above those range high, then on top of that, considering the link strength, I think that is an amazing alt to get long. And in that case, my stop loss is the previous daily closure, let's say 234. I don't want it to go much lower. I understand that it can, retrace a little bit down, but I don't want the candle to close as an engulfing red candle to the current green one. And my TP1 is, let's get a little bit more conservative. My TP1 is 3.45. My TP2 is 4.1.
and you leave the runner for the swipe of those previous highs at 4.8. So it can be an amazing trade. What do we have here in terms of percentage? Well, we have roughly 100% to go. So that can be a nice spot trade. Of course, don't oversize. Keep in mind the rules for the risk management: 2%, 2.5%, not more of your entire portfolio that you should lose on that trade if things go wrong. In the Telegram group, I've been illustrating the early signs of ETH BTC strength. We took this Bitcoin trade yesterday precisely to the level of 64.9. Right now it's in profit, stops are in break even. I expect a bit more upside. We entered Palantir yesterday. I was actually also asking you guys what you would like to see in today's video. Of course, I can't ask everyone, so I have to ask only the participants of the Telegram group. But we had around 250 people voting. So today, that's the reason why we are focusing mostly on Bitcoin and altcoins. And I also mentioned some of my trading and scalping techniques. We also entered couple days ago the Bitcoin miners, because I've been bullish on Bitcoin since 61k, and I was anticipating that this Bitcoin move would actually get translated into some of my favorite miners, namely CleanSpark, but also for those who want to get diversified, we have WGMI or WAGMI Bitcoin ETF that actually corresponds to a basket of multiple ones. Now, let's have a quick look in there. I think that if you're bullish on Bitcoin, there is such a better trade to start getting positioned on some of the Bitcoin miners. I also like Cypher. I think Cypher provides here a great entry. Your stop loss should be around 368, 370, but you can target TP1 $5, TP2 $5.70. When it comes to CleanSpark, similar picture to me. I am quite happy, sorry, that I'm heavy loaded on CleanSpark, but I'm also quite happy that we have swiped that low, right? This low here came as a swipe. So my stop loss would be just below this one. And I see right now that the short sellers are in danger. I see a lot of poor highs at the level of 1830, but also at the level of 21. I think we will sooner or later reclaim that level in this huge monstrous W formation. When it comes to Marathon, I think Marathon actually looks, despite I don't like a particular Marathon for a couple of reasons which are related to technicalities of the mining, nothing to do with the chart and nothing to do with the balance sheet and fundamentals. So it's like a very geeky reason why I'm not so heavily loaded on Mara. But yes, Mara is very soon due to the bounce out of this, the wedge, ascending wedge. I don't really trade the wedges, but you know, sometimes they work on the daily or higher time frames, just because there are a lot of traders that still put a lot of attention to that. If you're gonna trade it on the intraday, that's the 100% chance to go broke, but on the larger time frames that still work sometimes. And it's also right now not so much about the wedge itself, it's simply if we are able to get away from that level of supply, and then we will start accepting above the supply level, then obviously on Marathon Digital Holdings, I see how quickly we can accelerate back, especially taking into account the amount of short interest. Let's have a look. So Marathon, positive net income, increasing revenues. When I gonna go to the short interest, ooh la la, more than 20%. Yeah, I think Marathon is actually quite probable for a nice continuation here for those shorts to start covering. Well, once again, as I said, if you are not feeling 100% comfortable with owning the particular miner, and for the sake of diversification, you would prefer to enter the ETF, there is the Valkyrie Bitcoin Miners ETF, as I mentioned. It's called WAGMI. Yeah, nice coincidence in the name. Obviously, you can see as well, here we are about to break through that zone of supply, and once it's done, unfortunately this gap is already has been filled, but I still think that the level of 17 and the level of roughly $18, this order block that had formed the market structure break, are possible TP, TP2 and TP1.
As you can see, guys, I am happy to enter and exit the trade, the same trade, multiple times until I'm happy with my entry point, my average prices. Then I can make the stop go to break even and let those trade run. And it is absolutely okay, as I'm not a holder. I'm not expecting to retire by the age of 50. I am someone who wants to compound 50, 60, 70% per year on a 7-digit portfolio, no matter what the market gives. So for that reason, my biggest enemy is the capital gain tax on the short-term gains. And what I'm using and what I recommend you to put your attention at is the 401k account or IRA or Roth IRA account or any form of trading that would allow you to minimize on the taxes. And that itself brings the tremendous extension to your portfolio growth. On top of that, with I Trust Capital, which is the sponsors of today's video, you can buy and sell crypto, you can buy and sell gold, and get exposed to other 24/7 markets beyond the stocks themselves. It provides a very low cost, no monthly fee, and for the DataDash users, it also allows for a nice sign-up bonus. So please check it out. The comment isn't down in the description. All right, guys, despite the fact that in this current environment, I feel so much better in the stocks because I have large position sizes and I sleep way better with Baba that I gave in the group. And also in the previous video on Friday, doing 12% from our entry, less than in a week. And Piedmont Lithium is running, and SoFi and AMC and much more, including Apple and all of those short squeeze candidates. I still want to tailor my videos to what the audience want, and for that reason today's video was fully crypto related. I also would like to ask you if you enjoy seeing the entire trading view without my face to focus better on the charts, or it's actually a little bit boring and you prefer me talking in a little circle down below. With all that said, guys, amazing weekend ahead for all of you, and we see each other soon. Stay tuned.